Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporations. And let's just say today's filing is about to give us a little shake up. So V2X Inc. has dropped a Form 8K, which is basically a big announcement of important stuff happening. Today we're diving into a sale of shares by a major owner. This filing is all about V2X Inc. and a big stock sale happening. Think of it like a major shareholder deciding it's time to sell a chunk of their ownership in the company. Now, what exactly is being sold? It's the company's common stock, which is basically ownership in V2X. And where do you find this stock trading? You can find it on the New York Stock Exchange, a pretty well-known place for big companies. Okay, so the main event here happened on August 8th. V2X, the company itself, signed a deal, an underwriting agreement with RBC Capital Markets. This agreement is for selling a whole lot of the company's stock. And who's doing the selling? It's not V2X itself, but a big shareholder called Vertex Aerospace Holdco LLC. They are the ones putting their shares on the market. How much stock are we talking about? Vertex Aerospace is selling a cool 2 million shares of V2X's common stock through this deal. This sale wasn't just a casual thing, it was set up using a special type of filing, a shelf registration statement, which allows companies to get ready to sell shares over time. This specific one was approved back in September of 2022. So the shares were offered and sold with the deal officially closing on August 11th. Now it's important to note something here about how V2X itself was involved in this sale. Get this, V2X actually bought back some of the shares that were being sold. They bought 200,000 shares from the underwriter, RBC Capital Markets, at the same price the underwriter sold them for. This means V2X didn't make any money from this sale. The money went from the buyers through the underwriter to Vertex Aerospace. V2X's buyback was more of a strategic move, maybe to control the supply of shares a bit, or for other internal reasons. Even after selling those 2 million shares, Vertex Aerospace is still a really big player in V2X. They will still hold over 10 million shares, which works out to about 32.3% of the company. That's a significant chunk of ownership, giving them a lot of influence. Now, this is where things get really interesting from a corporate governance perspective, because Vertex Aerospace's ownership percentage dropped due to the sale. Even with the buyback, they no longer meet the threshold to have as many people on V2X's board of directors. Specifically, 2 directors that Vertex Aerospace had put in place will have to step down by the company's 2026 annual meeting. This change also affects Vertex Aerospace's influence on the company's committees. They can now only pick 1 director for each board committee. Before, they likely had more say. And the impact doesn't stop there. Vertex Aerospace has also lost its power to say no to some pretty important company decisions. For example, they can't block V2X from issuing new stock if it represents more than 10% of the company's shares over a 3-year period, unless it's for an acquisition that the board already approved. This really limits their ability to control new share issuance. They also can't stop the company from spending more than $50 million in a year on new projects or equipment, unless it's approved by the board. And when it comes to borrowing money, Vertex Aerospace can no longer block the company from taking on debt that would push its total net leverage ratio above 4.5 times. This is a significant shift in their ability to influence the company's financial strategy, especially concerning how much debt V2X can take on. They also can no longer veto the firing of the CEO or CFO. This is usually a pretty big deal in terms of shareholder power. Now, the filing mentions that more detailed information about these agreements is available. Think of this report as a summary, and those full agreements are like the exhaustive rule books. These agreements have been filed as exhibits to this report and also to previous reports, so anyone can go and read the nitty-gritty details if they really want to. It's important to understand that the promises and assurances made in these agreements are specific to the deal itself and were based on how things looked at a particular time. They were primarily for the benefit of the companies involved, not necessarily for investors looking at everyday operations. And rounding out the filing, we see the actual underwriting agreement listed as Exhibit 1.1. This is the legally binding document that outlines the terms of the share sale we've been discussing. And there's also a mention of a cover page interactive data file, which is basically a digital machine-readable version of the main report's cover page, making it easier for computers to process all this information. And finally, the report is signed off by V2X Inc. dated August 11th, indicating they've officially acknowledged and submitted this regulatory information. So what's the big picture here for V2X? We've seen a major shareholder, Vertex Aerospace, reduce its stake, which has naturally led to a decrease in its influence over the company's board and key decisions. This shift suggests V2X is becoming more independent, at least from Vertex Aerospace's direct control concerning things like board composition and certain strategic approvals. The fact that V2X bought back some of the shares being sold is a bit of a puzzle. It could mean they wanted to manage the stock price, or perhaps they saw an opportunity to retain some shares at a good price to manage their capital structure or employee stock plans. It's not a massive buyback compared to the total offering, but it's a notable action. The reduction in Vertex Aerospace's consent rights is probably the most significant takeaway. It means V2X's management and board have more freedom to operate without needing approval from this major shareholder for a range of important decisions, from issuing stock to large capital expenditures and even executive hires or fires. This can lead to faster decision making, but also means the day-to-day control is now more concentrated within V2X's executive team, and board members not directly tied to Vertex Aerospace's reduced influence. The risk here is that while more independence can be good, these decisions were likely put in place for a reason, potentially to protect Vertex Aerospace's investment, or to ensure certain strategic directions were followed. Now, with that oversight lessened, V2X faces the challenge of proving its independent strategy is sound and beneficial for all shareholders, not just those who remain closely aligned with the company's current leadership. An opportunity also arises for V2X to potentially pursue new growth strategies or partnerships without the previous constraints. Overall, V2X is in a period of transition with a major shift in its shareholder influence. The coming months and years will tell if this newfound independence translates into stronger performance, or if the removed checks and balances introduce new risks. It's a classic balancing act in corporate governance. Too much control can stifle, but too little can lead to unchecked decisions. Alright, that's our breakdown of V2X's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this reduction in shareholder influence is a good thing or a bad thing? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community discussions. Thanks for watching, see you next time.